Here are 5 tax planning strategies for exercising stock options. The first is regular exercises. It works for ISOs and NSOs. It's best when the strike price is low and there's little to no taxable spread. Key considerations include cash requirements, what the spread is at exercise, and the alternative minimum tax. The timing is important if you have incentive stock options. So if you work for a public company, you could consider exercising early in the calendar year. And the idea here would be if you end up likely triggering the AMT, if you were to hold the stock at the end of the year, you could just sell the ISOs and avoid the whole thing. But if you're at a private company, then you don't have a liquid market for your shares in most cases. So that's when exercising late in the year can be advantageous because you already have a good sense of what your tax situation will be for that year. In either case, be aware of your company's trading policy and other events that could prevent you from exercising or selling. The second is exercising ISOs when you have income from stock sales or vesting RSUs. This just works for ISOs. And it's best when you have high ordinary income already that tax year from vesting RSUs, a tender offer, or sales in the market. The AMT is a parallel tax calculation. The rates are 26% and 28%. The highest ordinary income tax rate, 37%. So there really can be a play with the tax rates there, given the differential and the fact that you need to pay whichever tax is higher under the AMT or the regular tax system. So there is definitely an opportunity to bury ISO exercises in your strategy to stay below the AMT. Early exercising with an AUB election is a third option. This works best for non-qualified stock options, although it works for ISOs too. The key consideration here is you want to make sure that you'll fully vest, and it's the same considerations of cash and AMT. It works for ISOs and non-qualified stock options. It's actually better when you have non-qualified stock options. When you do an early exercise, you exercise unvested stock options. And this can be really beneficial if you know you're going to fully vest and when the strike price is low and there's little to no taxable spread. In most stock plans, options will just vest over time. But if your plan allows for an early exercise, that can be a great tax saving strategy. The idea is that a successful company over time, the valuation or the stock price will increase, making the taxable spread even larger. But if you're able to exercise early, perhaps a new employee at a startup, that can really condense your overall cash outlay. It can also be a key reason for tax-free sales under Section 1202. With the early exercise strategy, the key is remembering to do the 83B election. The fourth way to optimize your exercises is after a down round or when the stock price sinks. Again, this works for ISOs and NSOs, and it's best when the taxable spread has narrowed considerably. Assuming you still believe in the company and its prospects, this could be an opportunity to get a better tax outcome. The fifth way to optimize exercises is making sure that you meet the criteria for qualified small business stock, QSBS. The main goal here is exercising while the startup still qualifies under the gross asset threshold, making sure that you get the timing of the exercise right if the company still meets the initial criteria as qualified small business stock. This allows tax-free sales up to $15 million for stock that was acquired after July 4th, 2025. In the One Big Beautiful Bill to increase the gross asset test to $75 million after that date. So once the company's gross assets exceed $75 million, the company will no longer be eligible for qualified small business stock. Being able to exclude up to $15 million in tax-free sales is a significant benefit, but the timing of the exercise will depend on whether or not you qualify if you meet the holding periods. If you have questions about your stock options, your exercise strategies, and you're looking to work with an advisor who specializes in the space, give us a call.